Hello friends. In the previous video we have studied about the foreign exchange rate and the types of foreign exchange rate systems, that is fixed exchange rate system, flexible exchange rate system, managed floating rate system. Today we will study the international experience of exchange rate management, that is since the beginning how it is being managed. So firstly we have the gold standard. Firstly, we will study about the gold standard. See, from 1870 to the outbreak of First World War in 1914, the system was fixed exchange rate system and all currencies were defined in terms of gold. All currencies were defined in terms of gold. That is, each participant country committed to guarantee the free convertibility of its currency into gold at a fixed price. That is, the exchange system was maintained in terms of gold. Exchange system was maintained in terms of gold. This meant that residents had at their disposal a domestic currency which was freely convertible. The residents had at their disposal domestic currency, and that domestic currency was freely convertible at fixed price into another asset, that is gold, which was acceptable in international payments. But now suppose let's think that if we are taking gold stocks, so if we it is quite hard to maintain, no? Means if any country has balance of payment deficit, okay, so it will lose its all the stock of gold. So or else we can say, if gold stock is down and the prices is cost, then the prices, they will fall and country will be in a worse situation. So when this method was being followed, several crises caused that gold standard to break down periodically. So it was modified. So after many years, what happened in 1944? In 1944, Bretton Woods conference was held. It set up the International Monetary Fund (IMF) and the World Bank, and it also re-established. So year 1944 was an important one. So IMF, World Bank, and they were set up, and also it re-established the system of fixed exchange rates. So this was different from international gold standard. So we are moving from the gold. This was different from that because the choice of asset in which the national currencies, the currencies of various countries, were convertible. For that, a two-tier system of convertibility was established, and the center of which was dollar. Then the US monetary authorities, okay, US authorities, they guaranteed the convertibility. They guaranteed the convertibility of dollar into gold at fixed price, and at that time initially that price was 35 ounces $35 per ounce of gold. Now the second tier of the system was commitment of the monetary authority of each IMF member participating in the system to convert their currency into dollars at a fixed price, and this was the official exchange rate. So in 1967, gold was displaced, and special drawing rights, SDRs, many a times question is being framed from SDRs, okay, special drawing rights. Actually this is term is little confusing, that is face value and its real meaning are different actually. So this special drawing rights, these are also known as paper gold in the IMF. So it was done with the intention of increasing the stock of international reserves. So, originally, in terms of gold, 35 special drawing rights, 35 special drawing rights being equal to 1 ounce of gold, that was defined in Bretton Woods system. So we have seen here two systems, what, the gold standard and the Bretton Woods system. So this was the initial Bretton Woods system. Now, but at present, so we should know the current scenario. At present, it is calculated daily. At present, it is calculated daily as the weighted sum of values in dollar and of four currencies of the given 5 countries, that is France, Germany, Japan, UK and US. The strong economies are taken into consideration, their currencies are taken into consideration, that is euro, dollar, Japanese yen and pound sterling. So these currencies, special drawing, see, now we know now what are special drawing rights. That is, they were used for displacing the gold, and these special drawing rights were created for the management of the foreign exchange rate, and this is nothing but the paper gold. So gold is being displaced by the paper currency, and now what currency? Dollars. So what all currencies are convertible into these hard currencies, or the four currencies given, that were euro, dollar, Japanese, this is yen, and this pound sterling. Okay, so so this one, special drawing rights, derives its strength from IMF members, and IMF members being willing to use it as a reserve currency and use it as a means of payment between central banks to exchange for national currencies also. So now, question is being asked about hard currencies. Now, what currencies are included in it? That is US dollar, UK pound sterling, France and Germany's euro, Japanese yen, and one more, 2016. In 2016, now Chinese economy is growing stronger day by day. So Chinese yuan was included in the list. See, hard currency is just a term. Hard currency is nothing but the currency which is reliable, which is globally traded, which is available in the international market for transactions, in which the international transactions can be carried out. That is the hard currency. Now, how many currencies are included in this? 5. Okay, now 5 currencies are included in hard currencies. Now, there is also a term that is soft currency. So, what is soft currency? This is the term which is used in foreign exchange market. Okay, this is the currency which is easily available in any economy, and this rupee, our rupee, this is a example of soft currency in Indian forex market. Okay, so the hard currency and soft currency. So in this we have studied about the exchange rate management at international level, how it was carried out. Firstly, we were having the gold standard, then we were having the Bretton Woods system, and now we are having the SDR, special drawing rights, and these are the 5 currencies which are included as hard currencies, and we know the difference between hard currency and a soft currency. So this is all for today. Thanks.